I think the big cultural issue with some of the bank mergers is it's almost historical legacy. Do the banks essentially have they grown up the same? Do they have the same sort of ambitions and sort of missions? And you find the biggest cultural differences are mixing banks and thrifts or mutuals and stock banks, just because they came up through the ranks differently, they're conditioned differently from birth. And I find that sort of it can be like mixing oil and water together. If a bank buys a thrift, do they pick up the type of business that they want to pick up when they want to grow the business? So I find that it's more, there can be a cultural mismatch for the type of banks you put together. That's where I'm seeing the cultural issues. Merging two banks in a similar market, adjacent market, I think those can be smoothed over. But obviously, good leadership helps. Communicating with your employees helps. There's obviously, particularly with the publicly traded banks, where there's cost savings printed off in the earnings release, and employees know what cost savings mean. It can be very difficult, and you really have to communicate well with your top performers to make sure you retain them.